SpaceX shares slipping for a second straight day as it wraps up its first week as a publicly traded company following a record IPO. Our next guest has held shares in the company since 2021. Joining us now is Chris Kerlow, Senior Portfolio Manager and Investment Advisor at Canaccord Genuity Corp. Chris, thanks for being here.
Thanks for having me.
Give us your sense too, right now. You've been, investing in the company for 5 years now. How has the thesis for you evolved as that valuation has climbed?
I mean, the valuation now, you really need to believe in the company having a solar system class founder, something that was tough to buy into at a $60 billion valuation in 2021. But we participated along the way, most recently with a private round in October of this year, a little bit below $400 billion. It's obviously taken the market by storm, catching news lines every day. Our goal now is actually looking at trying to hedge some of this risk. The options chains just became available on Tuesday. And so we're looking at trying to minimize some of that concentration risk in client portfolios with unique solutions for them.
Okay, and so what is that strategy? Outline that a little bit more for us too. What does that look like in practice as you look to hedge?
So we work with some providers. We're going to probably look at a structured note solution. Inside of that would be what would be considered a put spread, possibly writing a call premium to reduce the overall cost. And then basically it's an insurance policy. Well, during this unique 12-month lockup period with shares coming into the market, we could try to hedge some of that downside, knowing our clients' underlying risk, their cost basis, and reducing the chances of this turning around and watching these gains wash away as they remain locked up in the private market securities that obviously have a vesting period that everyone's tied into at this point.
Mm-hmm. You touched on the attention, right, that SpaceX has been getting even before the IPO. There was a ton, whether it was here or otherwise, and investors, a lot of hype around this now too. At least for you, how far ahead for this, are expectations getting ahead of the fundamentals of the stock?
It's really hard to judge it on current fundamentals. I think you got to look into the future. The 10 million subscribers they have with Starlink has been one of the fastest network designs in history. I think that has a ton of runway, but not only with their own network, but bringing that connectivity to the cell phones we have or will have in the future. They signed 11 airlines just in the last year alone, bringing those planes connectivity along the time. But I really think things like the AI-1 Starship that's going to have 150 kilowatts of compute power per satellite and then trying to launch 1 million of those, they're going to bring AI to space. You're going to have near continuous power from solar, totally renewable, bringing that compute power to Earth at the speed of light, as well as their ambitions to move beyond our planet to the moon and then eventually to Mars, and utilizing that infrastructure to power the demand in those regions as well.
Mm-hmm. More generally, you've been de-risking, you've been raising cash, or I think almost at the limit for you, as you were saying in some of the notes. What's changed in the market for you that has made you, a little more cautious at this point?
I guess it's what hasn't changed. I mean, we came into 2026 off of multi-year 20% returns for the S&P 500. Near that, with the TSX outperforming last year in 2025, we built our cash positions at the start of we came in with a lot of cash. We built that up over January, February. And then as we know, tensions grew in the Middle East and the market started selling off. We deployed that cash into the markets. And now we've snapped back to all-time highs. And so all we're doing is getting back to that level. And markets are now, past where we started from. Price to earnings multiples are stretched, supported by strong earnings growth here in Canada, the United States, and even emerging markets. We're just taking profits, and the markets owe us nothing after the returns that we've been able to capture in the last several years. And so we're sitting patiently with the chance to deploy that back into the market.
And for you, generally too as well, how should investors be positioned here for the second half of this year and through the end of 2026?
I really think you need to be looking at diversification, not just going to what's been working. Metals are a good example of that. Gold, silver, people are caught up on the next move, 20% higher or lower. I was talking to a silver company out of Bolivia this week who is using an MPV that I think is really sandbagged, because those values that they're using for the commodity price just 2 years ago are triple or quadruple what they are today. So if you have a project that was funded just a couple of years ago about to come on to production, they're going to spit out a lot more cash flow than we were originally expecting. So we like those mid-tier metals and mining companies. And if you're worried about debasement, how we're going to have the energy for the electrification of this AI wave that's coming, I think it's a great natural hedge to have a good metals and mining exposure in a client portfolio.
And you also added to uranium energy too as well after a weak quarter. What opportunities are there? What might the market be missing?
So really a world-class leader in the uranium production space, zero debt on the balance sheet, $500 million of cash. Not a great quarter. Stock pulled back to single digits. We had recently exited the position, substantially higher than that. We dug into the numbers and realized that it was really about people believing that they're not going to be getting going as quick as possible. But we're working with our analysts, reading what their research was. We thought that was misunderstood by the market, and we've got back into the name. They have high inventory levels, and uranium prices have been relatively flat. You add to that the seasonality coming into the fall. Very few uranium contracts are made. It typically happens in the late summer months, and so we want to be well positioned going into that seasonality.
Chris Kerlow, Senior Portfolio Manager and Investment Advisor at Canaccord Genuity Corp. Appreciate your time today, Chris. Thanks so much.
Thanks for having me.